Mic test, mic test. What's up, Turbo, mate? Yeah, just thought I would jump on, do a bit of a stream. We'll see how many people connect. We've got 3 so far, so what's up? I'll let a couple more people roll in, I guess, before I dig into it. Or I'll just start when I find something to start with. Because I didn't start this with any idea. I'm just gonna wing it completely. But let's check it out. Let's go super macro to begin with. That's always a good spot. I'm gonna turn the music back a touch as well. There we go. Alright, so what is this? 1, 2, 3, 4, 5th red week in a row. There's still 5 days remaining on this one, so it's not over yet for this week, but it's still red. It's still pretty bad. Something I did notice, by the way, if I go to the monthly, let's turn off all the drawings so make it nice and clean. How many months in a row have we had red? I know there's 11 days left of this month, but 1, 2, 3, 4, 5th month. 5th red month in a row. That's more than last bear market. We never had 5 consecutive months red. There's always at least a pause in the middle with a couple of decent, green months of relief, and then, another 3 bad ones. Relief, bad, relief, bad. So this has been pretty brutal. There's been just no upside momentum, really. There's been some stalls along the way, but other than that. And then look, even the 2 bear markets ago, you've got... Okay, this series here was bad. This was 6 months of red. 1, 2, 3, 4, 5, 6. And that found the bottom on that 6th month. If you go logarithmic. Or on the 5th month it found the bottom, but yeah. That was kind of savage. That wasn't great. If I go back to the all-time and look at the first sort of proper bear market, I suppose. 1, 2, 3, 4, 5. So 5 months in a row downside. The rest was upside after that. This was pretty brutal as well. This was like just a long grind. Savage. But yeah, it seems like every bear market is unique as far as, consecutive months in a row, how deep the cuts are in, valuation. Like they all behave differently, but I think the interesting thing about this market, this bear and the previous one, is that it's kind of, I know you've probably seen this a million times already, but it's similar. Like it's played out fairly similar. You know, this market had some kind of a consolidation at a high of, like, you know, a couple of weeks, few weeks down or backwards or sideways. This market had many weeks backwards or sideways or down or whatever you want to call it. This consolidation kinda is similar in some respect to that. And then you had this high that was set in, which was similar to over here. We had this high and a rollover. Then we had a push higher here, push higher here, bear flag here, bear flag here, push down, like slight consolidation, so push down, and then we're sort of in this, if it was to be the same, this similar slight consolidation here. So if it maps out the same, that means we got something like this. You get a bars pattern. Let's do that. Let's get the whole gamut. Now, if I turn it logarithmic, I might be able to match it up, similar to like what I'm trying to suggest. Now it's, now hear me out. Wait a sec. It's more than that. It's like all of this, the whole thing. You go like that. I mean, this is taking liberties, but there was another fractal that I'm going to pull as well in a minute, which looks eerily similar. So it's the daily fractal. So the fractal I just pulled, and if I take it down to Bitcoin's hourly chart, you'll see that the hourly was behaving similar to our current bull run. But anyway, that's kind of what I know. That things don't play exactly the same each cycle. The timings are similar, but the path is different. It's always, you know, every path is unique. But yeah, I mean, that kind of looks realistic. That doesn't look too far-fetched. Like, you know, getting down to around 50k, 48 or 52, between 48 and 52,000. That kind of retests this low here, this high here, that high there as well. And it's just a nice recheck. And then we take off, like, so let's say the bottom is found, like, you know, early Q4 this year. That satisfies that, and then it comes up later. Anyway, let me show you that other idea that I had. So it's the daily, and it's our current bull market. It's a fractal from our current bull market. So like this. And it was down on the hourly chart, if I remember correctly. So I'm going to shrink this right up, dump it over here, just go to the hourly. Yep, here we go. Okay. And I was looking at it, I'm like, hey, that looks familiar. Can you see it? Gotta zoom in a bit. Or a lot. It's not going to be perfect, but it's interesting. The elements are kind of there. You've got a massive crash, a dip into a floor, a rise back up, regain structure, consolidation, huge impulse, flagged out, another high, consolidation, pull back, new impulse, new high, and then a correction. And that's just, yeah, I just found that interesting. So these fractals, like, yeah, charts can, sometimes you can find sections that behave similar. Not identical, but, you know, there's similarities there. All right. What's up, Kale? Let's zoom out a little. Have you noticed that, well, at least I have, if you're a Discord kind of person, in the crypto Discords, they're getting really quiet. They're getting eerily quiet and boring. And everyone's slipping into like a crypto depression. And that's why I titled this stream, Crypto Slips into Another Coma. Because it's just sideways, man. Sideways. Check this out. How many days now? So these 2 days here, back to back, were exciting. And then you've got like 10 days so far of just, not a whole lot of things. Like we're just chopping in a range once again. Much the same as like what was happening back here. Like there just wasn't really any major outcomes for a long time, and we're just buying time. Bitcoin's just buying time, just going sideways. So that could totally happen again, like where we just meander, like nothing's really happening, and you know, it gets us all the way to May and we're still in the 60s, between 60 and 70. That could totally happen. Creating another flag, or if it happens anything similar to last time, remember we had our bear flag here, we fell, and then look, this chop here could be what's happening right now, this chop. So if I just grab that section of the bear market, duplicate it here, and I'll get suggestive by dragging it. See? You see that? Now the height of the flag, all that's a little different, but you can see what I'm kind of getting at. It's kind of eerie how the patterns are like kind of tracing. You know, significant drop, flag, another significant lightning bolt looking thing now, because you get another drop out of it, more drama, and then you've got this little ray of sunshine, this little bit of hope that everyone's getting excited about. Same shit. And then eventually, like, if this is anything to go by, we're getting some kind of one last, like, sizable drop. And then the rest is going to be, like, just grinding out for the rest of the year. According to that, right? That's making a big, I know that's a massive assumption, saying that we're going to play exactly the way this played out last time. And it may not, it may take a totally different path, but yeah, interesting to see that. Because obviously we know it playing out like this is possible because it's happened before. So using that as a reference is okay to do, I think. But it is so weird how it's, at least at the moment, it's obviously I've stretched it and squashed it into position. But yeah, all of the elements are there. All right, you get the point. Let's see, moving averages. Let's discuss those. I'm going to jump up onto the weekly. Let's just go our simple moving averages. Now, which is which? I wonder. Okay, that's the 50. That's the 200. I don't know why it's not showing me what's what. Anyway, lost the 50. Never even kissed it on this return back. You notice that there's a fat gap between them. That's the simple moving averages. It may be different with the EMAs, the exponentials, but at least with the simple moving average, just the moving average. Now the moving average, obviously, that has no bias to time. It just gives equal weight to the previous 50 candles and it averages them out with no bias. With an exponential moving average, it has more recent, it adds more weight to the recent candles. And I feel like the EMAs, this is my opinion, I've heard this before, I picked it up somewhere, but the EMAs are more suitable for lower time frames, like the 15, the 5, and the 1 minute. Whereas if you're going to start jumping up into high time frames, a simple moving average is going to serve as, you know, serve as good enough of a purpose. That's a hard way to to structure that sentence. Anyway, check it out. So last time we actually got through the 200-week SMA. We smashed through it, but we didn't get too far below it. So you know that anytime you get approaching the 200 SMA on the weekly, this is of high value. Like these are really good prices to pick up Bitcoin in. Even back here, like if you started DCAing, in hindsight, right? Obviously we got hindsight on our side here, but you know, these aren't bad prices considering where we went in the bull market. Like if you had bought here, it didn't matter that there was further discount. Just keep buying it. Like just keep DCAing. And you know, your average will live somewhere near the bottom. And then that's the point. And then you get in and you're in it for 3 years. You hold it for 3 years and you distribute up, you know, when everyone's euphoric and the markets are all green. And yes, this bull market that we just had was not really euphoric. It wasn't explosive and exciting like this one. Like this bull market was way different. And this one, especially this one. If you look at it logarithmically, you can see that these had these really impressive rallies that went up and got everyone hype. Whereas this one, it started and then it flagged it out and everyone got fatigue, started and then flagged out, started and then flagged out. See how it's like, it's just chopping and getting back into contact with that 50 weekly SMA on repeat. Whereas these ones, you can see price never really came to visit the 50 weekly SMA. It kind of hovered above it, like if anything. It was probably bouncing off the 20 or something, or the 10 week SMA 50. I won't change it, but you can see it's got like this invisible trampoline under here where it's getting support off it as it's coming up. But we just never really, this is probably the most impressive part of the bull market that we just had. This run from down here to like maybe that high there, that was 2023, or the back end of 2023, after the ETF approvals here, and early 2024. And then arguably, obviously, the presidential election, and then the tariff crash, and then the tariff recovery rally. So there was only really 3, maybe 4 good rallies that we had this bull market, but they weren't long-lived. They were just, there's 1 there, there's 2 here, 3 and 4. I think a lot of that has to do with the economy, like the monetary policy at the time. We were under quantitative tightening, which means the interest rates, or on top of the interest rates being up, high interest rates, relatively speaking to the previous, bull market. And last bull market, interest rates were 0 or 0.25, and we were in quantitative easing. So it was a completely different environment economically. So this one was difficult. The last one was easy, like for the bulls, in some respects, right? Because it just went up. It went, especially with the altcoins. We had an alt season, which is what we really didn't get it this cycle. There was no alt season. I think there was maybe a week, maybe 2 of good action, but nothing like all-time high crushing performance. it wasn't anything too significant. But yeah, so historically, you can see every time you lose the 50 SMA, that spells the doom for the cycle. Like the Bitcoin has, like, you know, established that it's gotten below that orange line, that the cycle's over. Like the bullish, all of this upside momentum has shifted. You've gone over the hill, over the peak. I don't think anyone's still arguing that the bull market's still on, or that there's a chance that we can pick this one back up, because yeah, it ain't looking that way at all. You know, you lost it back here, and yeah, now you just have to be patient, accumulate, and I think it does cycle again. I think we do get another cycle, but it's just, yeah, now's not the time for hoping for the return of this bull market, because it's done, in my opinion, and many people's opinion now. All right. What else should we look at? I guess we could get into the nitty-gritty of if we're doing anything like last bull market, or last bear market rather, that means we're in this section right here, right there. And how many days? Let's take it from the like the crazy wick down, so we'll include that day, and then let's try and get like some kind of, there seems to be some kind of a shelf that goes about here. So from the day there to when we lost it, 31 days, so basically a month of sideways. So let's map out if it's gonna play like that this time, all the way over here. If it's gonna play like that, then we've got some kind of a shelf here. It's a little different, it's not identical. We had a long wick to the downside on that other one, but 31 takes us off screen. 31 there. So the 9th of March. So we could, if we play out similar to that, it could take us till the 9th of March before we get the next leg down. So buckle in or strap in, because it's gonna get boring, potentially. If it plays like that, you know, look, where's the 9th of March? Here. So about there. So if we just, like, you know, maybe we do a bit of fake out, you know, a little bit of activity like that, but ultimately, yep, we're only about halfway through, if that, maybe a third. So yeah, I don't think expecting anything dramatic in the next however long. How many days is that to go to the 9th of March? Let's have a look, including today's, to the 9th of March. Another 20 days. So almost 3 weeks more of this sideways is on the cards, in just going by fractal, you know. See, the problem with that is that, like, if you go by fractal, if you go by like how long it took, this flag took how long before it sort of broke down? About 100 days. Let's just say 100 to round it off. This one only took probably like, let's see, 70? So it was 30 days faster, arguably 60. 60 to 70 days, this flag. So it's fast, it's happening faster. So that maybe then this one's faster than this one, potentially. But anyway, let's go back to my other Bitcoin chart real quick. Just want to see if there's any. Just on the smaller time frame, there was a couple of trend lines that I was tracking. There's this one here, thanks to obviously that high and this high. get a line going down that way. And then you've got this low, and then this low, these two pivots linked up, and we've grinded on through it. You know, weren't able to hold it as support, and we've lost it for now. Let's see if I duplicate. I just want to see if there's a parallel with the top of this happening. Not really. It's a bit messy, but there is. You could argue that maybe it's developing. Let's take that idea, like just this local slope, and see if it matches anything up the top here. Not really either. It's a bit of a stretch because you're cutting out so much action. Anyway, just doing a bit of research, bit of discovery, exploring. Have you ever heard of spaghetti charts? Yes, sir. I have now. I'm schooled in spaghetti charts. Anyway, what could this be? Have we had any situations like this, by the way, on our current crash, like on our current correction? Yes, we have. Like, look, there's that. Sharp, bounce. Could that be could you fractalize that at all, I wonder? I'll tell you what, if it can, it's gonna become boring. That's what this is suggesting. I might have to squash it to fit it. But yeah, it's it. You can see it's already quite different, but yeah, the way these behave, I mean, the overall trend, there's no question. Obviously the trend is down. So if you're trading to trend, look for shorting opportunities each time. You know what a really good tool is for that? Is the Ishimoku cloud, by the way. Don't mind me while I just jump around like different ideas, because I'm looking for things to talk about, basically. Trying to do a bit of exploration. We'll do a bit of exploratory technical analysis. We'll just go through all the different systems and time frames and see if we can make sense of anything. So I'm going to hide the drawings here, and you can see the cloud. At least on the daily, there was a couple of hints suggesting, oh, we might be able to recover, but no, it twisted back to red. Let's check the weekly. Yeah, the weekly is ugly. You know, we've just freshly lost the cloud. And running into the cloud like that's never a good sign either. Like, as soon as you enter the cloud, things are 50-50. Things become... There's no more bias to the market. It's lost all its momentum. Same with here. Look, you ran into it. You got in the cloud here. It's the same flag, basically. You got into the cloud. We'll call it the cloud flag. You got to be careful saying that. Cloud flag. Or we'll call it the Kumo flag. So look how much momentum we had to the downside compared to last time. It took time to get down, whereas this time it's just so rapid. It's kind of concerning, but I think with how rapid it's been, perhaps, this is just a complete speculation, of course, perhaps because of how rapid this has been, is that, you know, if price is to ultimately go, let's just say it goes to 30,000 eventually by the end of the year. So like somewhere in this blob is where we get down. We've already come more than halfway down. You know, if you take a Fibonacci retracement, let's use this as the level, because this will be 1 going 100% down. And then that's 0. So you can see we've come we're sitting around the 618, assuming that this is the floor, the 30k. So we've come about 61% of the way, 65%. It's even like spiked through that area. So most of the sell-off is complete. We just got that last quarter or that last third to get rid of, or to sell off. Not bad. Most of the damage has been done, and that like if it comes down in 3 legs, like 3 impulses with 2 pullbacks, like a 5 wave, 1, 2, 3, 4, and then 5 is like elongated or something like that. Then that's somewhat of an Elliott wave. But yeah, 1, 2. The third could be a grind. It could take a really long time to get us down there. You know, something like that. It could take longer. But interesting how that works, huh? Let's look at an altcoin. Look at Doge. Doge had this spectacular rally the other day. This is the hourly chart, and it was getting real exciting. There was a take profit event up here. So if you got out in profit up here somewhere, well done. Because it gave a whole lot of it back. You can see that. If I do a FEB retracement from like the start of it, let's just say it started around here. If you take the extreme, I mean, it technically started down there. Then this thing has, look at that, the golden pocket. Twice bounced so far at the golden pocket. Got a bit of a W formation happening on Dogecoin. Now, the other cool thing about Doge is that it's kind of trying to use 10 cents, not 10,000, 10 cents as a support now, because that is the top of the accumulation range from last bear market. You can see here, there's that accumulation box between 5 cents and 10 cents. So that would be really cool if it why is that all skew if like that? Oh, because it's reading out the low. Never mind. I'm just gonna get rid of the line there. Change that to like blue. Alright. So yeah, there's our Dogecoin accumulation blob. We've dipped into it twice now, but very briefly, so you got to be quick to pick it up. But I think, yeah, if Bitcoin does collapse further, obviously Dogecoin's gonna follow suit, and we're gonna get into our accumulation box, and then who knows how long we're gonna spend in there. Maybe 6 or 7 months. That one was for you, Juan Diego Santos. Kale says it's so hard to trade this. It's so oversold. A short recovery should be imminent. Yeah, like that's what I was thinking. I was thinking that if you go back to like the daily chart, notice that although these 2 days here were exciting, and that's what caused the Doge rally, the 13th and the 14th of Feb. Let's see. Yeah, there's the 14th, 13th and 14th. Those were exciting for some of the alts because they were so wound out. But there wasn't a lot of magic happening in Bitcoin land. It's still all in here, isn't it? It hasn't gone anywhere. It's just, let's get a bit of a white line happening so you can see what I'm talking about. Yeah, Bitcoin wise, there's nothing fantastical about that. Kiki Tree, Rick, it's Labubu, good to hear you. Hey, what's up? D Johnny 55, hi Rick. Hey Johnny. Yeah, there is no like massive relief yet. We haven't seen it, you know. traveling back to 80 would even feel amazing, let alone 70. Us getting back to like low 70s felt euphoric. It was a nice couple of days. You know, even the Discords were pumping a little bit. You had some more people roll through. What have we got? 13 people viewing right now, so that's cool. I'm gonna chuck out a little bit of a suggestion for you to consider. It's not advice per se. It's not financial advice. It's just consider this if you haven't. Like, you know, you can look back on this stream in 3 years from now and go, "Oh, I'm glad I sort of had that suggestion or that idea thrown my way," because you want all of the thoughts and theories that you can have. So from now, I would say, let's see, save up your pennies or save up your fiat, which is your US dollar, or quote unquote dry powder. Now, this won't apply to traders, people that trade intraday, or, you know, swing traders that are always trading. You know, they don't have any investment plans for the cycle. That's totally fine. This is not for them. This is kind of food for thought for anyone that wants to carry something into the next bull market, like a big size of something. So save up your fiat, and this is for right now. Like, do it. You should have been doing this. You need fiat. You need powder. You need capital to deploy into the bear market to be able to buy and hold Bitcoin or something like that. Let's say you're interested in XLM or Dogecoin or whatever. You can actually be buying, like, arguably, if you look at Dogecoin on the weekly, you can quite happily be DCAing already and getting back into Doge with a decent amount of size, provided that we don't lose the 5-cent floor. But yeah, just take a nice, relaxing, dollar cost averaging approach. And, you know, when the market turns back on, whenever that may be, you've got this nice average position down here to take you up into the next rally. So just do it automatically. I'm just doing it. I've already started. I started a while ago on Bitcoin now, but I'm just taking it slow and easily, and just methodically buying when I can. And I do plan to get heavier on the way down with my averaging. So yeah, save up your fiat. I'll say example. Not everyone uses US dollars, but I'll say consider starting your DCA, dollar cost averaging, journey. Whatever you can afford, like, don't let's just use a very basic graphic of like a bear to bull, like an S-curve thing. So this is like a cycle to cycle thing. Okay, so this has a trough and it has a return to the next bull. Now, if we're lucky enough, Bitcoin tends to go higher than its previous bull, but for diagram and demonstration sake, we'll just say it goes like that. Whoops. Where did my drawings go? They're up here. Okay, so with dollar cost averaging, clearly you don't want to... Let's say we're here today. We're right here on the bear market. We're probably lower. We're probably more like here. Okay. If you start now, heavy. Let's say you have $10,000. Let's represent it by 10 coins. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, there's our 10 coins. Let's let's say it's 1,000, let's say it's 10 grand, 100 grand, doesn't matter. We're using 10 parts to this. Let's start with the smaller looking coins. But every week you can add, especially if price is correcting further down, just add each time. Now, when it's getting later into the cycle and the prices are getting deeper, start bringing twice the amount, you know? And let's say it goes deeper again. Bring more to that level. Maybe four, like all the rest of it, you know, something like that. All I'm trying to describe is that the last, here's DCA1, DCA2, DCA3, DCA4, DCA5. And this is oversimplified. Of course, you're going to have more than just 5 DCAs, but you want to get it bottom heavy, because ultimately that will get your average position. Let's use this squiggly green line. That's ultimately where you sit into the next bull market. So the average would be like somewhere down here if it was weighted like that, because you've got five on this side and then 5 that exist somewhere up there like that. So it's going to split the difference, which is probably like somewhere about like that. So it's like, yes, you didn't nail the bottom of the market, but you got somewhere nearby with dollar cost averaging. So it's a beautiful system. It's a beautiful approach. And same can be done on the way out of the market. Like, you can start trickling out as you come up, you start selling. And then, you know, when it starts to round off and the momentum has been lost, you just get rid of the rest of it, you know, just dump it out, just as an idea. But yeah, you average in and you average out, and that is a decent way to sort of interact with the market over the course of 4 years, 4 to 5 years, basically. Also, there's nothing wrong with bringing, let's say you manage to afford another, another entry here, like this. And then you swing back up as we're coming back and recovering the bear market. There's nothing wrong with buying up like this, averaging in to the bull as well, like doing that. And then let's say, you get to maybe 12 months into the bull, you can stop buying, and then your average is still going to live somewhere like low, like weighted low. But there's nothing wrong with buying on the way down to the low and then back up through after the low has been set. Like, you can totally, but the point is all of the weight is down the bottom, as close to the bottom as you can get, and you'll get there with timing. So I don't know a system that's better for investing than dollar cost averaging, especially if you have timing on your side, like, because we do with crypto, with Bitcoin. It's shown to be quite uniform with timings. I'll show you what I mean by that. I'm sure you've seen me describe this before, but sort of aiming for a low, aiming into the bottom of the market is so much easier than trying to figure out where the high is going to be, in my opinion, because you've got all this structure, you've got the past behind you to sort of gauge against where support might be found. Look how much traffic there was through this section. How many people are going to be bidding in this area, like buying? Heaps of people. It's probably already begun. This is why we've pulled up where we have, because we've just run into this massive order block here of past, price action. It's the old all-time high. Arguably, it's here too. This was the 65k all-time high at the time, and then the 69 up here. But this is a lot. There's a lot of contention. There's a lot of price activity in these areas. So basically the block between 60 and 70, we'll call it. We're currently in that buying block. So just, consider. And by the way, if you do this DCA strategy like I am, that doesn't mean you can't trade as well. Like, you can still have a futures account where you dabble around with a few $100 or $100 or whatever you can afford, right? Nothing's stopping you from doing that. I'm just saying, consider having a backup where you got to gauge the level of risk. Futures versus spot, holding spot, buying spot. Have you heard too many like horror stories of people that do spot and dollar cost average into the cycles? No, it doesn't really happen. People don't get liquidated doing that. You can hold it indefinitely without paying fees. You can store it on a hardware wallet. There's so many merits to holding spot crypto. It's a very relaxing, stress-free, way to interact with or behave in crypto and any market, even into the stock market, right? This is what people do. Retirement funds, they all do this, averaging in. Every time you contribute into, at least in Australia, we have something called superannuation, which is similar to the US's 401k, which is kind of like a retirement fund. You pay into it, it's a hedge fund, and they allocate for you. They allocate onto what they think is a good asset and what a good mix of assets. And then you're there to contribute your income or whatever amount periodically. Like for me, I think it's like once every 2 weeks, my employer will contribute, well, basically every pay. But yeah, and that's the same thing. It's just averaging in. You're just averaging into the markets, and then when the fund or when your investment matures, which means it's gone past the point where you can actually access it, the idea is that they've put it into the right stuff, and it'll come up and provide a good return on your money, because essentially you're going up against fiat currency. Like that's the opponent here. You're trying to increase your wealth, which is obviously measured in dollar value. If you're from say Australia or the US or Canada, like we measure everything in the dollar, especially the US dollar. Like look at crypto. I'm on a dollar US Tether. Tether is a US dollar bound cryptocurrency, stablecoin. So, collect your. So to circle back to the original point, get your fiat in order, and figure out a plan for, getting back in if you are out. If you haven't started yet, well, that's even better, because there's a fairly, I think there's more higher chance that we end up dropping out of this box that we're in than we are swinging back up. So that's just my bias, that's my opinion. Obviously the bias is down because we're in a massive downtrend. We're downtrending, we're in a bear market. It would take a lot of pressure, something would have to shift to break this downtrend. Just like it did last time, like we shifted, and finally, it's like someone opened the door, and we were finally allowed to come back up. But you can see, in a bear market, it's repeated lower highs, lower, lower. So I don't think we see $100,000 before the bear market is concluded. I think if we were to see 100,000, that would conclude the bear market. It would probably be over, but yeah, I think that's a very unlikely chance that we see 100,000 anytime soon. Maybe like into early next year, we start to rally back up toward 100, but I don't think it's happening within the next 9 months. So with that in mind, yeah, like finding the low. TA on stable. As in stable coins? Or is there an altcoin called stable? Or I don't know. Stable USDT. Alright. Let's do some altcoin technical analysis. Stable. Whoop. Get the D out of there. Stable. I've never heard of stable, but we'll check it out. Oh, okay. It looks like it's new. Fairly. Well, December last year. It's interesting. It's not doing what the rest of the market is doing, which is bear marketing. It's not doing this. At least it's attacking its previous little high here. Arguably it's done like a swing fail above these wick highs. Got a little bit of action there. That's a hell of a wick though. Look at that Darth Maul candle. Let's jump back to the 15-minute. We'll see why. Yeah, look at that. Crazy. It's gone. It's very dramatic. Look at that. Well, right now it's kind of bull flagging in a way, because you got this bounce and now it's like funneling down here. So I would wait for the break. This is down the 15-minute chart. So that would be my hope for upside. If it fails like this, if it doesn't manage to break out of that and starts to lose this trend line here, I would say short it. But for now, whatever you do with it, make sure you're using a stop loss, because look how dramatic it is. Look how violent the swings are. Like, yeah, be careful. That's insane. What a short that would have been if you had shorted here and then caught that collapse. That would have been really nice. Just check what the depth of that is. Almost 30% in a very short amount of time. 2 hours, 2 to 3 hours it took to get down there. Not bad at all. 27. But she's very volatile. Kind of exciting to trade if you're into that. If you're into like something that has a bit of a thrill to it. But yeah, there's no doubt. Okay, what I would say is that what took it from down here to up here has been broken. So this uptrend here, this situation, that is no more, because look, you've lost this last low here, which was this last swing. It's had its neck broken, just like on silver. Silver right now has done a similar thing where it got down below significantly, so that the tide has shifted and it's rolling. Like this suggests a rollover right here, because you're no longer getting higher highs and higher lows, you're getting lower highs and lower lows. But so that's why I would be very cautious of expecting this to spike out. I'm not saying it can't, like obviously it can. Look how much drama's in the chart. But if you're just taking those little hints of like higher highs, higher lows, lower highs, lower lows now, like the potential of it spilling out over here is higher to me than it actually getting the bull flag break. But that's going to be interesting to track, like which, it's either going to fall A or erupt B. Obviously it's going to do one of them, but at least you've got boundaries here. You've got this trend line here and that trend line there to give you some kind of targeting system. So you now can target a trade that goes B or a trade that goes A. So a long or a short. And I think don't position inside the boundaries. and try to guess which direction. Wait for it to give you the direction. Wait for the candles to start existing outside the boundaries, and then that's kind of the way I try to trade if I'm trading. Like, you just got to wait for the actual breakout, and be aware of manipulation, because that happens a lot too, price manipulation. So yeah, what do you guys think for this stable's not so stable, evidently. Oh, what's up, T Black? When Lambo, Rick? Yeah, maybe in 3 years. $4. Thanks, man. Appreciate that. I'm actually drinking coffee right now, so I'm gonna assume that he's drinking coffee there. Cheers. Yeah, stable USDT. Way to go. Hopefully that gave you a bit of extra something to think about. Maybe you were already on top of that, thinking about that anyway. I'm just gonna open up the... Yeah, look at that. Holy shit. That was a nasty sell-off, but a pretty swift recovery back. I wonder what the FEBs say about that drop. If that's 100% back, and see how it's dealing with that golden pocket right now. No worries, Turbo. Bon appetit. Bon appetit. Working on my French accent. So, oh look, it's gonna try and attack the highs here. Potentially. Let me just get this real specific. Just gonna increase the visibility here on that. And I've cut off that wick there, but look how much harmony there is. There's this guy, that guy, this guy, and then him. So that's a lot of harmony there. There's a lot of uniformity here. Do we have enough fuel to break through? Not yet, apparently. It's still... And this is the low time frame. This is the 5-minute chart. But what are we? We're basically quarter to the hour. So we've got less than 15 minutes left. 12 minutes. And then it's the final... Then it will be the final hour of the daily. So we'll see how we go. I'll keep that on my other screen here. Go back to Bitcoin, see if there's any developments. No. Still in the grind. Still in the grind. You know what would be really frustrating? And quite possible and probable because of the way Bitcoin behaves. How come this box just goes into infinity that way? Let me fix that up. Sorry. There we go. I want to take this to the 9th. There. Okay, about there. We got the top boundary and then the bottom boundary roughly there. Cool. The problem with this is the chances of Bitcoin doing that and then like that are pretty high. Like us just being range bound. Obviously it won't be that uniform and perfect, but you can see it sort of gets itself stuck in these ranges. I mean this was more like a here to here thing. With a lot of tests at the bottom there. Some activity through the top and the bottom, but ultimately sticking in that range. Let's go to the 4 hour actually. But yeah, Bitcoin loves to range. That is basically when no one has there's no real ideas about where direction to go. They're just accumulating. You know, if we were to get all conspiratorial about it, you know, the people that control the market, they create these ranges for the purpose of accumulation. They're buying. So these, whether that's building a short or building a long, who knows? Like, depends on the outcome of what, you know, what they decide to, where they decide to push it. But that is just a big assumption that I've made there, that's what they do. I think a lot of it's probably just indecision as well and low volume. Like, no one's really participating. You know, more and more of the crowd is leaving the building. You know, if crypto was a stage show, all of the audience members are like, most of them have left, and there's maybe like a handful of people still sitting around like us, watching the show and trading and buying Bitcoin right now. But I think a lot of retail probably like busy doing other hobbies and activities or jobs or whatever. Maybe betting on sports or trading the stock market or into silver and gold still, the precious metals. But it's not really Bitcoin's time right now, if you ask me. But as we know, that happens. Look, it happened last time. Bitcoin got boring and stale and old news, just like back here too. Boring, stale, old news. It happens. Look at all this grueling section through here. Nothing. Like, so boring and flat. Maybe COVID was the most exciting thing that happened there. And maybe this rally at the start. But then everything else, like everything that I'll circle, was just a grind and just really boring, like what we're getting now. So retail don't like that. Retail hates it, and they go and find something exciting to do. And that's okay. If you walk away from crypto, at least have some kind of plan of saving money, like save up some money perhaps. Even dollar cost averaging is good to add to that, but you want to have something to take advantage of when things start to show that they're rounding out and we're breaking structures back to the upside. I'll be doing streams about that. I'm going to be making videos, so stay posted with that. See how there's 13 people viewing my stream right now. In the bear market, like in the true depths, like when we get down low like here, that number will go down to like 4 or 5 people. Something like that. That's kind of what happened. I had hundreds of people up here and up here. And then when it rolls over and people get wrecked, that number drops in viewers. Same for other channels. It's not just my channel. It's like same, YouTube wide. Retail just walks away, and they miss the opportunity down here and down here, and they come back late. They come back over here, or like, at the breakout, and they're getting in later, like through here, the big pumps, they get in, they end up positioning up here and positioning here, and then getting stopped out or liquidated. And you just want to avoid all that drama, all that, unless you're like a trader and you know what the hell you're doing, like some of us try to pretend we do, or that's a bit of a dig. Look, in our community, we've got a lot of good traders. There's no doubt. There's a lot of profitable people. I'm not a good trader, by the way. I'm the first to admit that. I'm not. I've had good runs and good, maybe a couple of good weeks or a couple of months in a row where I've been profitable, but I seem to have a hard time keeping it because I keep rolling the dice. Essentially, I keep throwing at it and getting more risky and brave, and that's not a good thing. That's not a good long-term strategy. So if you have a lot of discipline, trading probably will suit you. If you are disciplined, good money management structure, a trading system to follow that has very defined rules about stop losses and take profits. And if you know your strategy is profitable over time, it has an edge, then you can make trading work. But if you're just sort of, oh, there's some momentum today, let's trade. Like if you're just a casual trader, you're probably going to come unstuck, which is kind of what I did. There were just times where the market catches you off guard and you get stopped out for thousands of dollars or whatever. It can happen. Like if you don't have a regimented, structured approach to trading, you are highly likely to get wrecked. You got to treat it like a job. It has to be very regimental, and it's almost like a military operation. Like it has to have all these rules and structures. And yep, if you don't have that in place, it's going to end in tears. Unless you get really lucky. Here's the thing, getting lucky in the market, the chances of you getting lucky, I mean, there are chances, but the chances of you using all of the profit, all of the fruits from that luck, you throwing all of that in again, because you think it's going to happen again, and then you giving it all back, or a lot of it back, are high. That's a very common story. People making all this money in the euphoria and then rolling the dice just like it was a pump again, and then thinking that there's another pump coming, like it's bound to happen. It's because we just did it. It's been, they have like this recency bias that, there were all these beautiful rallies and pumps, and that they just can't, they throw it all back in, expecting another one. But the market doesn't do that. The market just doesn't go up and to the right forever, like, especially with the cycles in mind, right? They run out of steam and they roll over. Like, that's just what happens. Like, look, they find a high and they roll over. And this is like a longer term thing that happens. Like, it just, the momentum shifts, and the more that you can adjust to finding when the momentum is slowing, the better off you'll be, because you'll be able to sell off and get uninvolved as it as it starts to round out. And same with the downside. Like, we'll know when the bottom is in, when the selling, when all these crescendos, like all these cascades start to dry up, just like last time. Look, huge cascade, second bigger cascade, third, fourth, fifth. See how it starts getting real? It just starts to trickle. That's when you know there's the momentum to the downside has dried up. All of the water has been squeezed out of the sponge. And that's when you know the market's ready to shift, especially with timing. Do I need to bring up the timing chart? I mean, I guess I could quickly do it. How's this going, by the way, real quick? Still inside the box. Yeah, hasn't done anything just yet. Okay, timing-wise, let's just get that up real fast. Let's go to the weekly. Halvings, highs and lows. Timings, logarithmic. We've got a blueprint. It's all laid out before us. There's a roadmap, essentially. So betting, and who wants to bet against a 12-year roadmap that Bitcoin's had, right? It's not impossible to break it. Like, obviously anything's possible in the market, but do you want to side with possibility or do you want to side with probability? Like, you definitely, like, I'll give you the answer. I'll give you a hint. You want to side with probability, not possibility, because, where's your edge with possibility? Anything can happen. It can go to $10 million next week, or it can crash to zero. That's all possible. There's enough money in the world to do these things. But is it probable? No, it's not probable. So get in tune with what's probable, in my opinion, and you'll be a lot better off. But anyway, look, halving, see the distances. They're all laid out really nice, and they're all harmonizing. Look how uniform all of these tops and bottoms are coming. So with this, I think the bear market that we get, or that we're in, will find its bottom, I would say late September. Like, start really searching for that market low in like late September, early October of this year. I mean, last time it happened in November, 21st of November. But really, you want to start eyeballing. And look, the distance from the bear low to the bull high last time gave you the blueprint for when we knew the bottom was in. And if you had duplicated from here to here, if you just duplicate that distance, it gave you the top in timing. Like, it gave you there to there. Look, see the timing? The timing was roughly on par, just like it was over here. Bear to bull, look, timing, same. Timing, probably similar. No, it's actually faster. So this one was different. But that's older than 12 years ago. But anyway, you get the gist. I know I sound like a broken record because I've talked about this many times, but do you remember only like 3 or 4 months ago, people were touting that, oh, the halving cycle's a joke, it's gonna break, which sounded great if you were a bull because you wanted the market to keep going up and to the right. But evidently, it's done exactly that. It's done exactly the Bitcoin cycle. It's in timing. Like, you couldn't get it any more. I mean, you could get it within a couple of days more accuracy, but it's pretty damn precise. I should take it to the bear there. Yeah, timing wise. Okay, I think I've made that point abundantly clear. So this is why I'm targeting. Look, we've barely even made it halfway to the bear low that comes in. This would be about here. So in April is roughly the halfway point in time, not price, but timing. So left to right. Timing. Let's use one of these boxes because that has time. Yeah, so on a horizontal axis, halfway will be around April, mid-April, early April. And then, the floor will be sometime late. I think this is a little late. I think it'll happen a little sooner. Not much sooner, but a little sooner. Maybe late September, early October. But yeah, I think you're gonna... The cool thing is, look, even if you do start buying around here, because look, it very well could be the case where we only get, a little bit more dipped, and maybe the low will get found here, and we might not get lower than 50. That's also a possibility, right? What if we don't get below 50? Like, what if it stays up? What if it, what if 49.5 is the lowest we get? And if you're sitting here expecting 30, you're going to have a lot of powder, a lot of money that you had prepared for dollar cost averaging that never happened. And you're going to be wishing that you had deployed more up here. So it's tricky. It's like, and this is why dollar cost averaging exists, because it assumes, it's what you use when you admit that you don't know where the floor is. You're willing to take an average. That's what it is. That's what it's for. It's not a targeting system for the bottom. It's just, I'm just taking it a chip at a time. I'm just eating away at the market, buying it up wherever it might be. and I'm happy to take, the average for my overall position. That's all it has to be. Simple. You're not trying to. It's not a precision tool. It's an average tool. When you say average, I mean just the idea of average. That is not precision. You're not getting the Bitcoin's price to the decimal place of the bottom. It's an average. So there's a big hint in the whole methodology about it. So I sold back in September. Okay. September. Yeah. Well, I'm going to be saying I bought back in September, 3 years from now. But yeah. Hopefully there's a few people that kind of are catching my drift here, getting the message about how the market flows, and things are gonna feel a lot more hopeless in a few months too, by the way. See, there might still be some little bits of hope about this happening, or all we need is at least a relief rally, like, something, give us something, some kind of upside. That might not come. So be careful with that assumption. And same for the downside. Be careful assuming that it's going to get to 30. Careful with your assumptions in either direction. You don't want to assume too much. Just remain humble if you can about where the floor is. The floor could be in, arguably. That's possible. 60,000 might be the floor of the bear. We don't know. You might get relief that takes us back to 80, and then we meander around between 70 and 80 for a whole bunch of time, and then we double bottom at 60 again, and then we take off into 2027. Well, that's extended. Hang on a minute. I'm suggesting that the floor gets found in, the later half of this year, which is 2020. Yeah, around here. So let's say, we get some kind of relief to 80. We bounce back, range between 70 and 80, then we get another drop. Everyone freaks out, panics. We swing fails 60, so we get down to 58 or something like that. And then we spring, and then we're off into the bull market, the new bull market, where we recover all of the damage, that happened this year. And then up we go, just the previous, 3 times, arguably. Oh, I just want to get this on logarithmic. Yeah. See how that seems to be the behavior of Bitcoin. You get this really explosive markup, you get a sell-off, and then a recovery, and then another explosion. Sell-off, recovery, explosion, sell-off, recovery, explosion, sell-off, recovery, somewhat of an explosion, not really. Sell-off, recovery, What's the pattern? That is the pattern. How long has this stream gone for, by the way? 1 hour and 20 minutes. And I've just been rambling about nothing. Not nothing, but I blame the coffee. The coffee's strong today. All right. How did we go on stable? Let's have a look. Stable. Oh, 5-minute chart. Oh, it's starting to peak up. This is cool. Interesting. Let's check the horizontals, by the way. You've got this high to contend with, which it's reacting at. And then you've got these guys up here, which is basically 3 cents. Oh wait, 304. Yeah, something like that. Be careful with your expectations, but that's kind of cool to see it pop the top of this. We'll see if it can get a trend going, like higher lows, higher highs, something like that. That would be cool. Let's go challenge that high there, What's that? 322.254. Yeah. This had somewhat of an inverse head and shoulders type situation happening here. Look at that. And then it erupted up. Oh, look, see, look, this is tricky. This is not easy trading. Look how dramatic it is. Like if you positioned somewhere in the breakout here, you're already back to your entry, and now you have to reconsider. Either close out and start again, or, you know, have a stop loss below here if you can afford it, and just hope that it holds ground here and carries on attacking the highs. Yeah, it's the tricky thing. There's always an element of leave it to the market. You know, you can try and line something up, but this is why we have stop losses, right? Because there's always an element of chance to. It seems like chance. It's not purely random, but it's, to at least from our perspective, it is as though the market's moving at complete random. So this is why trading can be so brutal and damaging and punishing, is because of that element of it all. Like the smaller time frame you get, the more wild and noisy it can be and unpredictable. So just be careful you don't get washed out. But look, this is like a nice little back test here. Hopefully this holds and you get to come up and visit that high again, and if not, break it. But yeah, there could be a little trade that lives there. You get long right now. Let's just do a hypothetical. Let's go for a 2% risk, which is a lot if you're using leverage. And then let's go 2 to 1. Let's see if we can get the 2 to 1 trade, which is about there, which is a 4% return for 2% risk. What is that? Does that target the highs? See, this is more of like a risk to reward target rather than a structural target. I feel there is like another way of picking targets, is like using structures as your targets. Like let's say this, even just this high here. Or using just the risk to reward scenario where you're picking out the recent swing low and going long. And see, look, it's already getting hairy, if you ask me. It's wanting to backtest more times. I'm glad you liked the thumbnail, Kale. It's great. Bitcoin getting into bed, ready to turn the light out. Ooh. So whatever caused the resistance here is kind of, it touched it again and was like, nah, I can't get through it. At least not yet. Here's the tricky thing with scalping on the 1 minute on a coin like that's behaving like this, is that you can find a good reason to get in. Like let's say the retest of this trend line, great, but the amount of times that it keeps revisiting that level and like maybe making you second guess and pulling the trade and then taking off later, or even worse, like even it coming down here and stopping you out and then coming up later on, like that happens a lot. Happens to me when I try to trade a lot. It's like, yeah, it's just your timing was off perhaps. But yeah, longing Longing the breakout, I don't know, maybe that's not a good idea. By the way, there's a lot of good channels on YouTube that teach strategy, like trading strategies. And they'll give you... There was one channel where he was ranking the edge, like the success rate over 200 trades. Let me choose. I'm going to see if I can find it. Bear with me. If I find it, I'll bring it on screen and show you what that channel is. Trading strategy. Win rate. Could be, is it? It's not that. It was a guy that had like a spreadsheet and he would compare all of the different strategies for scalping or trading. And he compared it all and it was really cool. See if I can find it again. I'll just check if it's this Trading Lab YouTube channel. Don't think so. Let me go digging. Give me a minute. I've got so many channels that I've subscribed to. Not TT Trades, because that's like an SMC or ICT kind of channel. Makers? Nah. Well, there's some really random channels that... My nephew's been subscribing to a lot of random channels on my YouTube account. Ross Warrior Trading. No, it's not that guy. Although his channel's probably pretty good. Breaking Bad Habits. David Lol. Definitely not. Brofi. Jarvis. Another trading channel. Kite Crypto maybe? No. I will find it, I'm determined. Market Lab? No, okay, no. You may have deleted everything. True Crypto, no. Was it Wise Trade? Maybe. Trade IQ? Wow, some of these channels that I subscribed to back in the day have deleted all their content. Okay, let's try this one. It could be this. No, it's not that. Sorry. Thought I was onto it. Let's just go trading strategy win rate. So this trading lab funnel, see the 86% win rate. MACD trading strategy. There's so many scalping ideas and strategies out there. 80% win rate, no bullshit.
Average retracement and the average loss. You finally get your bearish close. This is where we open a short using the true algo system. This is oil, and from here you can see the average loss versus average win. We're going to shrink this down to have a more conservative stop loss, and this is the average win amount. But there's something really special here. You see the average retracement amount is 19 points. That means we fully expect this to retrace back into our box and still play in our favor. We can look for it to retrace up to 19 to 20 points. And you can see we retrace the exact amount that we expect. You don't get nervous about your position, and from here you ride it down. You can see we immediately hit the full take profit on the average idea, 62 points for oil. Now you're done with the play. Retail traders continue to get swept up in the middle. And right here is when retail traders go long. We do not close above, there's no long. When we close below, we go short. We're ready to take an idea, but we wait for one more candle close to confirm. Still no confirmation, retail gets trapped, and boom, there's your short. You might be scared to take a short here, worrying that's going to retrace. And reminder, we fully expect it to retrace about 19 points and then still go in our favor. You can see this one doesn't retrace at all, and it's already in profit. It's now gone twice the amount of the average win. You can take your stop loss and trail it, be where the next candle forms or maybe the next fair value gap. And from here, we've hit the bottom box of the true algo system. This is where you secure your position. That's $1,500 on a single contract. If we
Alright, that looks like it's an algo. Anyway. The only trading strategy you'll ever need. Sounds so good.
Every single month that I tested it, it was profitable in the long term. No indicators, no patterns, just pure price action, baby.
That really is the fun part of this whole technique. I have more pleasure just be.
So this is a good channel, this Trading Lab. If you go into his videos, like there's a lot of strategies and things that you can check out. Heaps of strategies. Anyway, I'm gonna wrap it up. This one, oof, yeah, not good. This is getting deep into the retracement of that breakout idea. Now, check this out. There's a low there. There's a low here. Let's delete that line. Duplicate this one. Ooh, this is a bit more in line with what's going on. Something more like that. So maybe this continues to just, you know, funnel down before an outcome happens. I don't know. All right, I'm gonna wrap it up. Thank you guys for tuning in. Appreciate it. It's great to see there's at least a few people that still roll through and check out the charts with me, so that's cool. Hopefully you guys have some kind of plan with the bear market and that you're not just going to let it pass you by like the last one, like I did, sort of. But yeah, take advantage of a bear, like, because when it's 3 years of upside on the back end of a bear market, it's good to have something that's accruing value. Because if you come unstuck with trading or scalping, at least you've got that safety net to take you into the bull. You know, at least you got something working for you in the background. you know, keep trying to trade and all that, but you want to have that sort of security of, you know, something accruing over time. And just something to consider, not advice, just, you know, food for thought. All right, I will catch you guys on the next one. Have a good evening, have a good day wherever you are.